Good afternoon, everyone, and thanks for joining us for the JS Mindset Weekly Call. My name is Denny, and today is Saturday, October 5, 2019. On the call today are the boys in full, Jim Sinclair, Bill Holter, and the famous Dave. The old saying was, may you live in interesting times, and for the most part, none of us really knows if that's a blessing or a curse. But certainly, these are interesting times for sure. The politics in the House of Representatives alone are downright frightening, and many of us are looking on and saying to ourselves, where in the world is this leading to? Interesting times? I believe we're here. The markets are just short of, they're just sort of meandering around looking for something. The computers can't seem to get a real advantage over the other computers. And it's pretty easy to just say that the trading looks like a pheasant waiting for the hunting dogs to show up. If we look at the nuclear potential of the ever-growing derivatives book, it's rather frightening to think of what the launch sequence is going to look like, and even more frightening is what's going to be the trigger. American people seem to be waking up little each day to the deception to which they've been the target. Whether it's the Bureau of Labor Statistics or the now obvious fact that our politicians have sweetheart deals in other countries if they'll sell America's assets and trusts at every turn. Lying in all parts of government is stock and trade now, and nobody believes anybody from government or in government or working with government. Maybe when it's all said and done, famous Dave will be absolutely right, and you just can't trust anybody. And all the while, the central bank is shoring up a financial system whose future is on life support. The fact of the matter is that the dollars are coming back home because nobody wants them. So what in the world is next? Well, the whole idea of these weekly calls is to give you some other things to think about. Your investments, your analysis of current events, your glimpse of what things might look like in the not-too-distant future. But always remember, and we caution you about this every week, we're not giving you investment advice. We're just trying to give you another perspective of the economic world to add to your own perspectives, just so you can be prepared for what might certainly be some very trying times. As always, thanks for investing in the premium side of JS Mindset. There you have the access to Bill's writings. I still see them as the clearest set of thoughts in black and white on current financial events. You also get a chance to see what Jim's posting and Dave's posting. Dave reads more than any of us all put together, and you might just miss all that in your own daily readings and interpretations of current events. Well, Jim, I'm starting with you. I got a question this week that floored me. Uh-oh. And one of my friends said, Denny, what would happen if I could purchase gold and silver in my 401k through my employer? And, I go, wow. First of all, Jim, will it ever happen? And second, if it did, what would happen, Jim?
Well, precious metals in retirement accounts is not unheard of. And for that to spread via employee purchases paying for part of the purchase is only a natural development. So if retirement plus precious metals had never occurred, you'd say long shot. But because it has occurred, reasonably possible. Any added demand to physical, when the trend is towards physical being the price determinant, only speeds the process for free gold. Free gold is defined as free of paper, free of manipulation, free of counterfeiting. That stuff when you've got it 500 to 1 or 300 to 1, that's counterfeited gold. Oh, yeah, they hope it short covers in paper or long's happy with paper, but it's counterfeit. So you have these two things happening. The physical market is being denuded by the great European families on a constant basis. America is sort of ignorant of what gold is all about. All of a sudden, if pension funds actually did involve themselves in gold in any form whatsoever, which they will eventually do, and what eventually will happen is a non-delivery, which is the king has no clothes, and it is counterfeit, then China and Russia run the price, period, and the price of gold is anything they want it to be. and there's no way of stopping it. So what would happen? Well, the high estimates that I've made will be low compared to what the price will be. That's my answer.
Denny, I
Bill,
can comment on that.
All right, I figured you'd jump in. What's up, Bill?
Well, as it stands right now, in IRAs, people can purchase physical gold or physical silver. The form is restrictive somewhat because it's the gold and the silver have got to be 99.99 pure, with the exception of American Gold Eagles, which are 22 karat, not 24. Those can be held in IRAs. Also, within the pension industry, pensions already can purchase gold and silver. Very few do. One notable one is the retirement plan for, I believe it's the University of Texas in Austin. Kyle Bass got them to purchase gold years ago, and I don't remember when it was. I think it was 2012 or 13. The gold was, I think it was being held within the COMEX inventory, and they had it delivered out and segregated. So that has been happening, but like I said, it's probably less than 0.1% of retirement assets are in gold.
Bill, when they pick up momentum, the algorithms will wake up to them. When the algorithms wake up to them, the interest will grow drastically.
It'll become a momentum play.
Yeah, and when they become a momentum play, then all the idiots will recognize something's going on, and by that time, the older European families will have every bit of above ground gold. You figure what the price is going to be.
And Denny, one other thing. Actually, back in, I think it was 97 or 98, I actually met with Ben Edwards and David Sisler in St. Louis when I was working for A.G. Edwards. They, for their 401k plan, there was absolutely zero as far as options to purchase gold, silver, or anything, any type of hard asset. And I mean, that's just one firm, but they did offer I believe it was the Franklin Gold and Natural Resources Fund. It was offered to employees in the 401k plan. So it's not unheard of, but it's rarely done.
It's still got some challenges. If we can hold real estate in our 401ks and IRAs, but you have to have a third party, an arm's length transaction, and you cannot control any of the transactions. I think they can figure out there's still a few bumps in that they're going to have to figure out a way to custody the gold itself and stay away from paper. And if they can figure that out...
That's already done. That's already done, Denny.
All right.
All you need is you need a custodian and an administrator, and you can purchase and hold physical gold, physical silver in an IRA.
I'm going to continue to pitch underhanded to you. I've got this observation about the strength of a currency, Bill. I got a piece in my email this week about what determines the strength of a currency. And I'm going to give you the three things that the author picked out and then let you swing. He picked out three things: interest rates, economic policies, and stability. But give me your thoughts about the U.S. dollar on these authors' three pillars of economic policies, interest rates, and stability, Bill.
The one thing he's forgetting is military strength.
Military strength, all right.
Yeah, because, I mean, think about it. The dollar, a good part of the demand for the dollar is because if a country doesn't use the dollar, I mean, talk to Muammar Gaddafi about this, or Saddam Hussein. I mean, they wanted to move away from the dollar toward the euro, toward gold, and what happened? They were killed. So it's the first three that the author mentioned, those are correct. But another very important pillar is coercion or use of force via military.
How would you rate us on stability in the United States? I sort of think that we are one of the more stable countries, but as far as economic policies and interest rates, so if we say we have 4, we've got stability and military strength, but our economic policies and interest rates are weak?
I totally disagree with stability. I mean, there's not even a rule of law in the United States, really. There's a rule of law for them and a rule of law for us. So, I mean, I don't view, from a political standpoint, that the U.S. is stable by any stretch of the imagination. I mean, think about what's going on with impeachment. You've got the press, you've got the left pushing impeachment because they don't like the results of the election. That's not stable politically by any stretch.
You've just made the case to not bet on the U.S. dollar, which you've already been doing that for several years.
Yes.
David, let's add this to one more thing. This week it was announced that unemployment rate is the lowest it's been in 50 years. I'm not sure how they really come up with all of this, but if more than 25% of Americans are just not working, David, this is an in-your-face farce. Dave, what's your perspective on employment and unemployment from your day-to-day observations?
Well, what we want to also look at is someone who has a job that isn't paying them enough to live a middle-class lifestyle. So there's 2 things that you want to look at here. One of the numbers that they're giving you correct, and I would venture a guess that they're incorrect. John Williams has for years tracked these numbers, and it seems pretty clear that the numbers the government puts out don't match his. So I'm going to go with John's over the government's because he's calculating accurately what's going on. The government comes up with statistics or numbers that fit what they're trying to do to manipulate the public's image of the country. And as I said to Jim yesterday, the United States has grown about creating 136,000 jobs. That number doesn't even, I believe the country needs 150,000 jobs just to account for the people coming into the country. So at 136, we're actually in a negative number. So for them to jump up and down and say, oh, this is the greatest number ever, it's just simply not true. If you take that one step further, what are these jobs? What are they paying? How many people are holding down 1 and 2, I don't want to say substandard jobs, but sub-paying jobs? So as we look at these numbers, no, I don't trust anything that comes out of the government. It's all about getting the people to remain calm, so as Bill says, we don't end up with social unrest here, because I'm with Bill in the camp that everything appears fine on the deck of the ship, but when you look down in the engine room, things aren't that fine. If they were fine, you wouldn't have the Fed having to create money overnight to keep things calm. And, we covered this last week pretty extensively, that the overnight money has become a very big problem. So if everything is just so ducky, I don't see how that's possible. And it doesn't jive with the numbers they're putting out. And as Doug Gillespie taught us years ago, BLS is nothing but statistician magicians.
Jim, every industry...
Denny, let me just add one little quip to that.
All right.
They're talking about negative interest rates. They might as well talk about negative unemployment rates. Seriously.
You blindsided me. Okay.
Well, I mean, think
I like
about
that,
it.
Bill.
Negative interest rates are completely stupid. I mean, they make 0 sense. It's a snake eating its own tail. It's complete bull. So why don't they run the unemployment rate down to 0 and say it's negative? Everybody has a job. Everybody has 2 jobs.
Well, then they would be known for the liars that they are, and I don't think that's going to happen.
That's my point right there.
Yeah. Jim, I've been looking at different industries, and every industry goes through a slow time. And sometimes it's even a depression and not just a slow time. I've seen it in the real estate industry several times. But the gold industry seems to be in that very situation right now. And even the mining service industry is depressed, where those that make the equipment are looking for opportunities. And it's got to be a pretty tough business right now. So, Jim, when the gold and silver mining industry really does turn around, when the market prices are set loose, will the industry be able to respond to the demand that will be coming?
Well, there were 3,300 companies in the exploration and development business listed. There are now 800 only. The amount of companies that have simply shut their doors or gone into total neutral, sitting there and doing nothing, has never been as high. There's never been anything like this that's happened in the gold industry. And the majors don't explore to much of a degree, so the actual industry that supplies, lives, and thrives on the drilling and testing, etc., are in their own depression. There is no new gold. Where are the major multi-million-dollar ounce projects that are coming up? Except we know a few, one. Where are they? They aren't. So the idea that the price of gold will bring on a resurgence is going to be, to a degree, selective. It will be. How many majors do we have? Maybe 10. The point that there is no gold investment other than gold and a very few shares that are viable means that all this is going to get past like in a carburetor of old. If you remember, there was a thing called a Venturi. Okay, now that may be going back to the 1954. But what it means is it increases the flow of the mass by constricting the entrance of the mass into the carburetor. Well, we've got the same thing in gold. So, $1,000 gold share, absolutely possible. Okay, first one to 1,000, one with the most gold and the best manager, probably now Barrick. The few companies that have gone through advanced exploration and are beginning production, they're not going to be far behind. What you're going to see is almost like the price of gold. It will amaze you. And the algorithms can't ignore them once they begin to be momentum leaders, because algorithms are not built for political purposes. They're built for profit purposes, but they've been taken advantage of for political purposes. You know how to run a stock to keep it within the momentum parameters that they're able to run things to the moon. Well, don't give up on the gold market yet, listeners. The fangs might have been interesting, but the capitalization of every gold stock that still exists is less than one fang. Think about it. Consider that for a moment, because that's a fact.
Let me narrow this down just a little bit. The craft beer industry went through a huge growth spurt, and you could not get stainless steel tanks. You could not get distiller tanks. You couldn't get certain types of pumps, aeration units. What I'm asking is, if this support industry for the mining industry that does pulverizers, conveyors, sluicers, processors, once the gold price or once the industry awakens, how are these people going to keep up with the demand to get the gold stuffs out of the ground, Jim?
Well, in the first place, take a look at the very intelligent ones. Bateman is a major plant builder, okay? And what they've done during this very slow or depressive market for this goods and services, as they have acquired the top consulting businesses in the industry in terms of brains, ability, and reputation at and laboratories at very conservative prices. So SGS Bateman is sitting there waiting to profit mightily from this pickup because they believe in it. So those that have been wise, and like Merrill Lynch used to be way back in history, they always expanded during very significant periods of depression in equity prices, and that's how they built themselves a big company before they got a derivative department and blew up. But there are those companies that do the services that you're referring to, who stand prepared to make a fortune from the boom that will come in a very small amount of companies. 300 public have survived on the junior and the junior producer side, and there's about 10 majors that still are financially relatively sound because they all went broke, if you recall, when the derivatives blew up and the debt they borrowed took over their ownership. That's why Barrick was basically Goldman Sachs. But because of their failure to understand the gold business and because of the corporate culture not being acceptable to the supplying countries, the up-and-coming countries, the developing world, they have changed management. Whoever manages all of a company is the owner of the company. So you take Barrick, for example, now managed by the staff of and the company Randgold. They let go over 1,200 managers and are replaced by Randgold, which has 7 only. And the potential for the majors who have restructured themselves is tremendous. So those that you ask about that have consolidated and taken over the best of the industry, especially SGS Bateman, are going to make a fortune. A few of the majors that have recognized that gold companies are not financial companies, they're mining companies, and got rid of the guys that busted them, and who have gone after the best managers that existed in gold, like Bestow of Rand, now managing all of Barrick. In my opinion, it's a reverse takeover. Barrick's been taken over by Rand and by Bestow. So those guys are going to they'll be the FANGs. The FANGs are the major gold companies which have reorganized, recognizing they're not financial entities, that they went busted trying to be financial entities and can never try that again. They got to be miners. And those few of the exploration and pre-development development companies and mining companies, the smaller ones, that have very significant reserves and resources, will probably outperform the major. You've got to understand there is nothing there. Okay, it's a venturi. It's like an ice cream cone sideways. As that ice cream comes out the bottom of the cone, it's coming out fast and squirting a long way. And that's what's happened to the industry. The industry's gone. Those that have made it through this period and have recognized what they had to do and done it are going to be worth a fortune, in my opinion. So if my answer to the question is, there are SGS Batemans out there. And there are companies that have huge resources and reserves that were smart enough not to develop it until the gold market started to develop. I've been talking about this for, 16 years? More, maybe 25. Yeah. The timing between production and gold price breakout has to be synonymous. The majors have to reorganize, and there's a fortune to be made if you can figure that out.
The Yeah, the survivors are going to write the rules is where we're going, Jim.
Yeah,
those who have survived.
And there's only going to be, I'm going to make a guess. If there's 10 of them, there's a lot.
Bill, I got a couple questions from listeners. The first one is about the repo markets, and the second one is about a post you made about $0 trades. You're the old broker. So let me start with the repo market question. It's still QE process, Bill. Will the overnight support by the Fed continue forever? It is started now. Do you think this is going to go on forever? And then the second question from the listener is, what about $0 trades for commissions and the such?
As far as the repo market is concerned, yeah, I think that is in the process of busting open, and the Fed's going to have to supply whatever is needed or demanded. I did get a couple of questions from readers asking, well, if they're doing $50 billion a day, that's $250 billion a week, that's $1 trillion a month. And I had to explain that overnight repos are not cumulative. In other words, an overnight repo for $50 billion today, that $50 billion is settled tomorrow, so it's gone. So at this point, we're in the 52. What was the highest number? They did $82 billion overnight. I forget what the number was, but at this point, there's a need in order to keep the system afloat from one day to the next day. It's required $50 billion a day to do that, and that may shrink. You may see it go back to zero, but when all is said and done, I would be willing to bet, we're going to be seeing numbers of 200, 250 billion just on the overnight, just to keep firms from having to declare default or insolvency. On the zero commission for trades, think about it. That makes absolutely zero sense.
I've heard it compared to a banjo orchestra. So how do you do it for nothing?
You're in that business. You've been in that business for years and years. Years ago, and I'm thinking this was probably around the year 2000, or even maybe before that, when the discount brokers came in pretty heavy, and when we got to $9.95 a trade, I'm thinking to myself, well, how can they cover their overhead if Merrill Lynch is charging $229 for a trade, but Schwab is charging $9.95? How can they cover their overhead? And it kind of dropped, and I just never really thought about it. And then when Schwab came out and said they're going to zero, and everyone else followed the next day, it came back to mind, and I'm thinking it makes absolutely zero sense. And obviously, the commission dollars was not a profit center, and obviously at zero, it's not a profit center. So where is the profit center? And the only thing I could come up with, and I didn't have, I figured I would get readers writing in saying, well, they make money this way, they make money that way. I think the biggest profit center or area where these firms are making their money is, for lack of a better term, the carry trade. And the carry trade are on the assets that customers have deposited with the brokers, and the brokers lend them out to short sellers, or the brokers lend against existing positions via margin. So I think that's where they make the vast majority of their income.
David,
if you don't mind, I'd like to...
Go ahead, Jim.
I'd like to hear what you have to say on that, Jim, because, you've seen the guts of a broker.
What you have to recognize is this whole business is gone, okay? What I used to do for a living making markets in companies is not a human function anymore. It's a cyberspace computer factor. The specialist has become redundant, except for the fact that they can be a beard for short because they don't have to deliver promptly. This action takes out every broker you have. I mean, who could make a living as a broker? The world's so damn cheap. Very few people except you and I and the four of us would be willing to pay for good execution. So by doing trading for zero commission, there's no more commission brokers, or very few. And that results in more violent markets because there's no capital contribution to a market, and without brokers there's no retail whatsoever. So the geeks have screwed us from almost to the point of evaporating the market. What is left for them to screw up? Financing companies. So what will financing companies end up? I think probably crowd financing, more so because there's only one thing to take out, and that is your international financial lenders to operating companies. So the whole purpose of the market, which was to create a vehicle for financing, that was the purpose of trading, to liquefy an investment that developed coming out of the buttonwood tree, the tree planted when the stock exchange was opened, is dead as a doornail. The next thing they got to take out is the financing industry, and I've been thinking about where it goes. I have to come to some form of crowd financing. The financial business is over, okay? It's as over as fiat currency is over. Leaving
Jim,
only
maybe... Jim, let me translate that for listeners. What Jim is saying is that stocks, bonds, the finance industry originated in order to create capital to fund a business, whether it was railroads in the old days or whatever. And then stock trading itself is used to make those original positions liquid so that the original investors would have an avenue or a way other than a buyout to liquidate their shares. But the market's no longer, that function is busted.
And the markets are busted because of the technology. And this action by the discount brokers eliminates all your retail brokerage firms or retail brokerage department of firms. So the public all rushes to the computer, and on the other side of the computer is the algorithm. There's not going to be anything such as calling up a Marty McNeil and you want to buy or sell 100,000 shares, one of the great execution men of all time, Barry Frost, another one, where their business is gone. So you got markets which are going to be absolutely and utterly intolerable with their volatility, and along comes gold and silver shares, of which, I said there'd be 10 leaders, but, there might be 30, 35 shares only. And right now, one FANG is worth more than every single gold and silver share that exists in terms of capitalization. So what is the next step? They've destroyed everything only except the original reason for having markets. So the natural reasoning says they have to destroy financing of companies. And what we need to do is think about what that change will mean and how to profit from that change. A comment, Bill, if you don't mind, on the repo rates, overnight rates.
Mm-hmm.
Always at the basis of this, way down, hidden somewhere, is a failure. Whenever that market starts getting wild, you will find out that there is an Enron or maybe a Deutsche Bank or who knows, General Electric somewhere that's caused a problem. And you know that you can't lease gold for more than 1 year. and from a central bank. But somehow they always get renewed. So you can lease gold for any amount of time you want. It became a big way for any company doing any business to finance. The repos can be renewed, and although you're absolutely correct in what you're saying now, as the problem becomes greater, and there is no way out because the balance sheets are illiquid for the central banks, they'll simply renew the repos, and debt will consume everything else. Put those two concepts together, and they're wonderful questions to be asked. 1, 2. That's the destruction of the financial mechanism. What will be left? Physical gold and silver. What will be left? The few companies that understand they're mining money and handle their positions with that understanding. And the greater part of that is, why sell gold at the present price levels when you might be selling it at $3,000, $50,000, or more? That's my answer to those. My observation of what your answers said, and I want to thank you because you've been interpreting me for years, and I realize I need it.
David,
perfect interpretation. Perfect interpretation. Thank you.
Dave, I've been watching the impeachment noise along with the trade negotiations between Trump and Xi Jinping. And I've seen a little bit of a pivot, and I just thought I'd get your perspective. Do you think that the noise in Washington has weakened Trump's hand to the point that Xi thinks that he can outlast him in the trade talks? Do you think it's the politics in Washington has really affected those trade deals?
Most likely, definitely. I saw a great article this weekend, and again, I was going to send it in for post and didn't because I get carried away sometimes sending too much stuff in. But, it essentially said that North Korea knew that they had Trump over a barrel right now because he didn't get a deal with Iran, which obviously he was begging for the talks to take place. And Iran says, no, we're not going to do a photo op, or you can come out and say that maximum pressure has worked against us. So it's funny that you bring that up because as we're sitting here and I'm just keeping an eye on what's going on in the world, the North Korean talks have collapsed. I have said since day one, I had a good friend who's a muckety-muck. When the talks first occurred, we're going to get a deal, we're going to get a deal. He was in my living room, and I looked at him and I says, we're never going to get a deal. It's just there's no way North Korea is going to give up their nuclear weapons. They'd be foolish to because they would end up like Gaddafi and Saddam Hussein and anybody else who has ever given up their weapons. So obviously the impeachment problem, whether it's a charade or not a charade, and it just reminds me of what we went through with Clinton, God knows how many years ago. That was the charade of the impeachment then. Of course it weakens his hands because we're coming into re-election. And I've said this several times about China. China doesn't have to worry about a re-election, probably ever again. So, we're sitting in a position here where can China outweigh us? Absolutely. I'm reading an article today that, all of a sudden they want to increase the ethanol percentage in petroleum because the farmers are freaking out and, Trump needs a way to pacify the farmers because it's a big chunk of his voting bloc. So, yes, obviously it does create a situation where a leader of another country, be it China, North Korea, Iran, looks at it and says, look at that place. As we said earlier in our talks, you talked about stability. I don't see stability. I'm in Bill's camp. I just see complete chaos. And, yes, that obviously is affecting going forward what we're doing here. And, it's why the U.S. media is pushing the Hong Kong story so bad. I mean, the Hong Kong story is killing me. It's in every day. It's in every major media publication. But you can't find anything about the Yellow Vest protesters. I think 11 of them were killed. God knows how many thousands were wounded and jailed. You can't find anything about the weekend protests going on in Palestine. So, yes, this is definitely affecting global politics. And everybody's going to pick their side and say it's a farce, it's not a farce. Doesn't matter what it is affecting the decision-making as we go forward from here, what other countries think, say, and do. And it's to be expected because everybody's looking for leverage.
Jim, I read this.
May I suggest that China, being Chinese, and I've dealt in Beijing, quite experienced, by the way, will probably throw a peanut or two to Trump before the election, just in case he gets elected. Who would they rather deal with? This is a hand in politics. Maybe they want to deal with President Chelsea Clinton, or maybe Pocahontas, or maybe Trump. We don't know, because your lesson to us is they're all the same, and don't kid yourself.
But I think the longer it goes, I think the more Trump's going to demand a huge deal. If it goes on much longer, it's just going to have to be a bigger and bigger deal for him to get his.
You never get it from the Chinese. I promise you, the world will give you nothing. Zero, zilch. I've signed MOUs and contracts in the state, in a state house of Chinese, and they weren't worth the paper you wrote about.
Since
Sorry,
you're talking,
Jim, Chinese friends, but that is what doing business in China is like. You
were saying something. You were saying something earlier that reminded me of something I read this week in the paper. It said they were quoting a financial advisor, and he said, "I don't speculate, so I don't buy gold." And then he followed it up with, "The only time I want to buy gold is if I think the markets are going to crash." And he said, "That's just never going to happen."
Well, that's a thinking idiot.
So why do they think it's a speculation? Why is gold seen as a speculation?
Because it hasn't been taught. It doesn't exist in business school. It's a dirty word. It's a relic of the past. But how do you protect yourself today? You go backwards. Okay, what should you do? Pull in your horns. Go back to basics. Gold and silver are basics. And what I've told you about the lack of gold on the surface, new gold, plus the gold companies that have realized they're not financial companies, and what will develop within the marketplace in the Venturi concept tells me that the new fangs will be probably around 20 companies involved in gold. These people honestly believe it can go on forever. Because look at Friday. That was the greatest spin that ever took place in the history of man. The crappiest figures you ever saw in employment were released as the most wonderful and positive event in employment that's ever taken place. Stocks in the morning didn't know what to do, and they bumped around for an hour or two until the
flush protection
spin came out. And with the spin, they had the momentum that was required to feed on itself, and up goes the market $300 on the on the worst possible report you could get in employment. And I'm dying to see what Mr. Williams has to say about it, because his figures are 1970 figures at Matrix, which he puts present time figures through to see what these figures will really look like before governments began changing the metrics so that figures might never show inflation again. And if they show hard times, you could be sure that times are much, much harder than what they show.
Bill, in that same article, there was a quote. Now, the author of this article is a CIMA, and I think that stands for Chartered Investment Managing Assets, Chartered Investment Management Analyst. There we go. And he said in the same article, he says, contrary to popular opinion, gold is not a great hedge against inflation. Bill, how do you respond to that? He said that the best hedge against inflation is stocks. And I've already seen your analysis to Berkshire Hathaway versus gold, but how do you respond to somebody who just says, contrary to popular opinion, gold is not a great hedge against inflation?
Okay, I was going to jump in, but you asked the question that basically I was going to answer. A year ago, I was hired as an expert witness in a pretty sizable multi-million dollar lawsuit of a client that owned like roughly 20% of the portfolio was gold and silver. And they were suing the money manager for being so irresponsible and making the portfolio a speculative portfolio. And the bottom line is gold and silver are actual money. They're real money. If you go back to 1933 and earlier, the U.S. dollar was a derivative. It was a receipt for gold and silver. Then over time, and if you want to call it brainwashing or propaganda or whatever, over time, they've taught the public that the dollar is money and gold and silver are scary, scary speculations because they're so volatile. Well, it's not gold and silver that's volatile. It's the currencies that are volatile. So it's taken years and years, and actually I just saw an article on, and maybe, Dave, you sent this to me, regarding Kissinger back in 73 or 74 when they were, after Nixon had closed the window, the gold window, they were discussing how they could suppress the price of gold and basically support the dollar. So for years, all of my adult life, and yours and Dave's and good part of yours, Jim, our adult lives have been spent being propagandized that gold and silver are not money. Not only aren't they money, but they're speculations. And that's 180 degrees false reverse. Gold and silver are bedrock foundational money. Now, to answer your question of gold's not an inflation hedge, gold and silver act the best or are sought after the most during bad times. And whether those bad times are inflation or whether those bad times are deflation, it doesn't matter. Gold functions the best during the worst times. And why is that? Because unbacked currencies function the worst during bad times.
Dave, a lot of folks watch the Baltic Dry Index for shipping prices as an indicator of future economic strength. We started watching the Baltic Dry, 5 or 6 years ago in earnest. However, I think there's more to look at in another indicator, and I just wanted to get your thoughts. The big semi-truck orders are down. I think they're called Class 8s, and those orders are way, way down, Dave. If the trucking industry orders for new equipment are going down, Dave, that can't be a good sign.
Well, it's not a good sign, and that gets back to what we said earlier about the unemployment rate. What statistics are lying? Somewhere all of this doesn't match up. You say we're in the best economy ever and everything's great and unemployment rates are at record low, yet car sales for September were dismal. But they said that they were dismal because sales got pulled into August. So were August sales off the charts? No. I mean, they make up a story every single day, whether it's why the market did what it's doing. They just make up a story. They own the media. The media runs with it, and the public is clueless. And when I say clueless, it's not because they're dumb. It's because they don't have the time to sit around and try and analyze what's going on. 2, they want to believe what they hear because they're hearing happy thoughts. And it's like, the tooth fairy. Everybody wants to believe in the tooth fairy. They all go home and knock out all their teeth. They put them under the pillow, and they have to keep believing in the tooth fairy because they have no teeth. And that's pretty much what we're seeing when you see truck orders the way they are. Again, everybody knows who's listening that, I am probably the most negative person there is when it comes to believing anything I'm told by authority. Authority exists to misdirect us. Pretty much everything we know is a lie, just as William Casey said in 1982, when everything the American public knows is a lie, our job will be complete. And I think we're pretty much there, Denny.
Dave, to connect other dots, there was an article today about air freight rates. Look at rail freight rates. I mean, just look at overall trade. When you look at overall trade, it's a zero-sum game. They have to match. So if the U.S. is saying, oh, our trade's fabulous, and everybody else in the world says our trade's horrible, well, they have to equal each other. So, I mean, there's all kinds of dots out there that you can connect as absolute proof that the BLS numbers are exactly that, BS.
Jim, in your opinion, what's it going to take to get Wall Street and the investment community interested in anything to do with gold? Why is Wall Street and the investment community just ignoring it?
Momentum. And it will build because Wall Street is ignoring it. But there's a change coming in the matrix for valuation which will affect the ability to counterfeit gold. And there is significant money that's been made in huge amounts around the world as a product of 2008 and 2010. And that money is starting to look at its paper foundation. So as this trend continues, which it is more obvious in gold than it is in gold shares, and as momentum builds in and volatility builds in, we certainly have volatility in gold, do we not? On comes the algorithms, and the only way to stop it will be to pull the plugs out of the wall. They will hook onto gold, and that is the process by which gold will become, as you've already seen, major houses predicting gold at and above $2,000 an ounce. Why? Because of volatility and the beginning of a degree of momentum that has gained attraction. That's the answer.
Hey, Jim, let me add to that the word default in two separate instances. One, obviously, failure to deliver, that being default. When that happens, when people can't have something, they want it all the more. The
Absolutely.
other thing, once you start getting debt defaulting in domino fashion, gold and silver, real gold and silver, physical gold and silver can never default, and that will be an attraction.
Asset with no liability attached to it.
Exactly.
I mean, where else do you have that?
There is no other place.
No. And
Bill,
funny
that you'd bring up default. Bill, I read this week that the subprime mortgages are still out there, and not only that, more than that, they never really slowed down. And I'm reminded that if banks, and I can't remember if I heard this from Jim or you or one of my buddies, it said if banks can't make good loans, they'll make bad loans, and if they can't make bad loans, they'll make horrible loans, because that's what banks do. They loan money. Bill, what's going on the consumer side of the loan industry, and give me your perspective on subprime loans still being out there. I'm just shocked to hear that they're still valid out there.
Well, I mean, all you got to do is put your dog's name on a loan application, and poof, you got a loan. I mean, not much more needs to be said than that.
How can they package them in the environment of the 2008, 2000? I mean, that's what blew up the system, was it not? Nobody trusted anybody else's valuations. Are we not going to end up back in the same cake mix?
I would, when I was on my trip, I either going there or coming back, I finally, after all these years, watched the movie called The Big Short. And I would highly recommend that everyone who hasn't watched it, watch it, and anyone who's seen it, watch it again. Because in the middle of that movie, it described really why they piled into shorting the subprime loans. And what was true then is still true today. Like I said, put your dog's name down on an application, and poof, the money will show up.
All right, guys, I got one question for each of you left. Dave, I'm going to start with you. I know that you're not a fan of Trump, nor are you a fan of any politician. But, Dave, I got to tell you, I'm really pleased on how he's calling out the swamp week after week. He's called out Biden as a crook. He's calling him out as a crook who arranged sweetheart deals for his family and his son. And, Dave, I really like that. I'm hoping there will be more. Have you got any hope at all, Dave?
Denny, watching this to me is like watching the beginning of a WWF wrestling match as they're sitting there screaming at each other and all their hands.
Come on, Dave.
You asked me and I'm telling you.
No, I thought you'd be happy with this one.
Denny, it's a WWF wrestling match. The more they agitate the public, the more tickets they sell to the wrestling match. And that's what this is all about. Selling tickets to the wrestling match. I've said at least 100 times, if you wanted to put the end to the deep state, you could do it with a simple Twitter feed. Excellent work by the University of Alaska Fairbanks. 9/11 was an inside job. Thank you very much to American engineers. See what we can prove when we put our nose to it.
Hey,
then
Dave,
I'll believe.
Dave, let me
Yeah.
respond to that. First off, when Trump came in from day one, if whoever was not tainted in the DOJ, if he could have gotten arrests, it wouldn't have worked anyway because they would have been in front of Obama judges. Now, he spent almost 3 years replacing Obama judges, and for the most part, that's done. And I gotta say that just in the last couple of weeks, it does look like, if you want to just say Trump is on the offense at this point.
He's on the offense. The question is, how far are we going to go? Because Biden is just the low-hanging fruit. You know, at what point do we get to Maxine Waters? Do we get to Adam Schiff? Do we get to Pelosi? Pelosi's son's in this up to his eyeballs too. But, you know,
Well,
do we have any hope that
last,
it's going to happen?
For the last 3 years, what these people have done, I mean, there's a paper trail now for the last 3 years since the election. So these people, you know, not only what they did prior to the election, but what they've been doing since the election, there's a paper trail for it. And Dave, you wrote an email to somebody who had written in regarding, you know, the 100,000 or whatever the number is sealed indictments. The point I was trying to make is these indictments that started building up a year and a half ago, there's no way they could have been served and adjudicated, because they would have been adjudicated in front of completely bought, paid for, and retarded judges. And I think now we're at the point for this time since the election, there is a paper trail, or whatever you want to call it, of further wrongdoing, and the judges are now finally in place that will uphold the Constitution.
Part of me wants to say Dave's probably right, that it's hopeless. But the part of me is I still have a soul, and I still have this, you know, this mentality that this is going to work out. It may not work out as good as I want it to, but it's still going to work out. And Dave, I really thought you said, well, yeah, it might be that. No, you still are. It is not going to make any difference. And I respect you for that, Dave. I guess it's just the difference in the personalities. I want to believe that there's going to be a difference, and maybe and truly there's not.
But the bottom line is the whole thing comes down. The financial system comes down, and society comes down.
But maybe the rule of law, survives. I guess that's what I'm looking for.
God willing.
Right. Well, and again, Denny, I'll just put it this way. I've been right for 2.5 years on this. I've said 100 times. The opportunity has been there. When he said he was going to release the CIA documents on the Kennedy assassination, I held my breath and says, maybe, just maybe, this one's going to be different. When that didn't get done, I said to myself, it's all done. I've been right all along. I'm not a fool. You won't fool me twice. Fool me once, shame on you. Fool me twice, I'm a fool. I'm not going to be fooled again. I want production. I don't want to hear stories. I've seen this WWF slapdown before, making believe that this is going to happen and that's going to happen. And we have had Kavanaugh in there now for a full year. I've had this argument over and over and over with hardcore friends. Oh, when Kavanaugh gets in, it's all done. I left for the season. I came back in the spring to see my summer friends, and I said, so what's going on? Well, any minute now. Another 6 months have gone by. I'm not in the camp.
Well, Dave, the Supreme Court is split 4-4, and one Chief Justice Roberts, who voted for, uphold Obamacare, said it wasn't a tax. I mean, obviously they have something on Roberts.
Yeah, but again, guys, just after 2.5 years, the gold market's still rigged every single day. Every day. I saw it. I've been in this gold game since Bill Clinton was president. I saw him do it. I saw George Bush do it. I saw Obama do it, and I'm watching Trump do it. To me, and everybody can think what they want, I've seen this show so many times. And any president could have blown the doors right off the gold rigging. As I said in my email,
well, what would that do, Dave? If they blew the doors off the gold rigging, what does that do?
It would have woke the public up, like Trump said when he was running for office, that the government is artificially holding down interest rates to keep the stock market up so Obama could stay president. And that's the exact same thing I see this man utter every single chance he gets. Rates.
But if you blow up the gold market, you blow up every single paper market. You blow up the dollar, and it goes from there.
It's going to happen anyway, okay?
Yeah, it's going to happen anyway.
But
there's no stopping it.
So then jumping behind the stock market was my indication, and I hold to this because his term is almost up. And my buddies are, oh, no, when he gets his second term, this is all going to come out. First off, I don't buy green bananas because I don't know that I'm going to live till tomorrow. And I'm a lot younger and way better health than Trump. Secondly, if he had the goods, he's had so many opportunities to lay them on the table. And what did he do? He hired Rudy Giuliani as his attorney. Rudy Giuliani is 9/11 guilt all over the place. So I can't see how you could drain the swamp when you're surrounded by Pompeo, swamp creature, Gina, the torturer, swamp creature, Giuliani, swamp creature. I mean, I could go on for a half hour, the swamp creatures. So, and again, you're entitled to your opinion. I'm entitled to mine. And I believe that the fact that I don't back a party gives me the advantage to independently analyze things and without saying that my boy is this or my girl is that. I just call it as I see it. 2.5 years, he hasn't produced anything that he said he was going to do, in my opinion.
Dave, you've kept my hopium in check. I appreciate you. And if I'm in the foxhole, I think I told you this once, I'd rather have your ass in there with me than a lot of other people. But I can't, you and I are just so different.
As long as he's got his 50 cal with him.
All right, Bill, we were talking about...
Let me tell you a little short story about, being in the middle of this myself. Before gold was legalized for trading, Bert and I made the cash market along with Mercado Metals and a few other houses in New York in gold bullion. And it becomes a hell of a temptation when you really know what's going on in this stuff and it's trading around $40 and you know where it's going, to have a little for yourself. So, Bert fell for the temptation. And, of course, along came inspectors and collectors, and the next thing you know, they're messing around with things that are going to reveal Bert's position in physical gold for himself. So, being a son and being a little bit different than most people, and rather in tremendous admiration for Bert's intelligence, I said, well, son's duty. I'm stronger than you are. You're starting to get old. Let me take the hit. So we changed things around, and guess who gets called to the grand jury? Me. That morning, I kissed Barbara goodbye, and I figured I was never going to see her again. But before that happened, a friend of mine, Mitchell, the son of the Attorney General of the United States, was my lawyer. So I didn't know it was set up, and I go and believe me, this was a heck of a day when I did, I think, right thing morally, but the wrong thing for me. And I'm down there. I got to tell you, grand jury is scary as hell. Okay, because all you have is a prosecutor, and your lawyer's not allowed in there. And you're looking at two sides of a room full of people who are looking at you like you're, Machine Gun Kelly. And, the fellow says, you have statements of your accountant, Mr. Sinclair. Mr. Sinclair's a kid. I said, yes, sir. And they were really, the statements were almost embarrassing. They're so fakakta, crazy. And that, he says, may I see them? And, of course, I yielded the evidence. And he said, looks relatively okay to me that this was a household account for you when you were lived in Basel. And then he said, yeah, you had a Swiss account, but look, cash account, I don't see any gold in it. And he said, tell the grand jury who is your attorney. I said, I told him, Mitchell. And who is his father? I said, the Attorney General of the United States of America. And I walked out of there with no indictment for anything whatsoever. It's been rigged forever, guys. The markets.
And at least the statute of limitations is run up.
Yeah, well, 22 years old, for God's sakes. Goodness sakes. It's been that way forever. It is part and parcel of the system. The only way it's going to be taken apart is through the reawakening of fear in the public. And then a demand for silver and gold, which will overcome the mechanism of manipulation and actually use it. Okay? So, this is nothing new. President Grant had an office of payoffs. He actually did. In Washington, in the White House, he had an office of bribes. So this is part of humanity that is self-destructive. It's a cancer, and eventually it kills. And when it kills, what does it look like? Now. And this is what is going to happen, because this thing with the repo is not happening because they need dollars to buy cigarettes. This is happening because somewhere out there something's busted, okay? And they don't want to lend money to it at all. So they tighten up, the borrowing of money has to come out of the short-term market. This thing's ready to turn over. And it's nothing new. I mean, it existed when Caesar ran rates up to borrow enough money to buy his way into supreme ruler. he actually created a tremendous interest rate rise in money in historical Rome. It's finished because of what Bill said. Credit simply has gone beyond the money. There is more owed than exists. And something like this repo market could be the first real public show of what's going on underneath the fact that they papered over all of these problems in 08 and 09. And Paulson said at that Fed meeting, God only knows what we've done to the system, but it will not look like it looks today in a few years. In other words, they don't even know what's going to happen. And that's why they've continued to fib, lie, paper, and do everything else. But the repo market is the first smoke signal that there's a fire. And when this fire becomes relatively public, and greed and fear again find their way into the marketplace as now eliminated by computers, it's going to run straight over the geeks, okay? And it's going to take the two most disliked investments in the entire world, silver and gold, to heights that the FANGs, the technological stocks, witnessed and are witnessing. And it's going to be the only thing that will keep your standard of living and ability to function viable. That's all there is to it.
Bravo.
I don't have any more questions. That's a good way to end this.
Yeah.
Bill, have you got anything else you want to add?
Nope. That was super.
David?
He's gone. He's on a witness protection program.
No, he's not. Well,
he's on a sub-level right now.
He's on a sub-level. Well, listen, guys, all of you who are listening, thanks for listening to us. We'll be back with you next week. We just appreciate your support of JS Mindset and know that we're doing our best to give you as best content as we can. And with that, we'll talk to you next week.
Thanks. Thank you very much, guys. Bye-bye now.